Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, April the 29th, last day of the trading day of the month, last day of the week. Thank goodness it's Friday. My name's Doug McKay, and this is our pre-market trade plan setup. We come in each morning, take a look at the market, macro to micro, the structure of the market, and then we drill down to the targets, the trade levels, and the hypotheses that we're looking at for the day. Of course, we've made the first move that I was expecting down into that gap zone already, but we'll talk about that in a minute. This is a subscription room, so if you're interested in checking us out, I'll put up my contact information in just 1 second. Before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay. Where is my mouse? Here it is. My contact information, there's no blog, there's no website. This isn't a commercial venture. Just send me an email to quantumleapfutures@gmail.com or contact me through Skype. You will need a Skype account, and that's easy to do and free to do. And send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And then if you want to check out more of these videos, there's a couple of years of videos on YouTube. Just do a search for Quantum Leap Futures. And if you like what I do, follow me on Twitter. Okay, yesterday we were looking for a move up to open and then fail somewhere between the 8150 and the VPOC, and then roll over and come down and take out the overnight low and test the top of this gap zone. They took it a lot higher than I thought, and it looked like once they got up here in the upper distribution that they were going to chop it around and then go take out the overnight high at 64.25. They got as high as 63.50 and then sideways, and then they rolled it over. OTF stepped in. You can see that we had very little participation all day until we started to roll over, and then the OTF stepped in and took us down, put a weak low in at 65.25 area, and just above that gap zone, and had a neutral extreme. So we broke the IB high and the IBO below and closed in the lower distribution. This creates a neutral extreme. This changes the game plan, and overnight I was expecting a move down into the gap zone, and they didn't do it. They got down to 68 for the most of the night, and then just in the last half hour they took it down, and they're trading the top of that gap zone, and has gotten as low as 63.50. Remember, the 63.50 is the microcomposite VPOC from that older microcomposite at the last quarter of last year. So very quickly, we're going to take a look at where'd my news go? Take a look at the news. We did have news at 8:30. We had unemployment costs, quarter PCE, personal spending, personal income, all came out pretty much as expected. Canadian IPPI came in at much worse than expected. The only other news we've got today is we've got Chicago PMI at 945, and then we've got revised University of Michigan consumer sentiment and inflation expectations, and then we've got the Treasury report at some point in time today. But these aren't real big movers down here. I think the big thing is the fact that we're testing down below that gap, and possibly coming down into that composite VPOC. Very quickly, just run through the morning routine. I use a 9 EMA and a 20 SMA, start on the monthly, and I'm looking for slope and separation and where the trend is being challenged or violated. Good strength for several years, and then end of the year they challenged it, took it back, and then beginning of the year they violated it again, and they've taken it back, and so far we're holding above the 9 and the 20 on the monthly. On the weekly, we've had this very powerful move up. Our week is a negative week right now. Our open of the week is all the way up at 91.50. So we're probably going to end up with a bearish week, but we're nowhere near the 9 EMA on the weekly. That's down at that 20-40-50. That 20-40-50 is that microcomposite balance area that we broke out of, and we'll take a look at that. But the trend is up on the week. On the daily, you can see that we are challenging the daily. We've rolled over. We've come down. Yesterday we tested the 20 SMA. We're now currently trading below the 20 SMA. The 20 SMA is sitting at 69.70 area. If we get back above it, a move up to the 9 is going to take us up into the 78.25. Key line in the sand above us is going to be the 26 area. I'll show you why. And then the key line below us is going to be that 58.50. And we'll take a look at that in a minute as well. Going into the intraday, you can see we've got trend starting, got good slope and separation. Prices paralleling the 9 nicely. So the trend is down coming into the RTH session on the 4-hour. Same thing on the 1-hour. 30-minute has a possible FUBAR Mr. Sneaky tech gap. A move to the tech gap will likely take us up into that 69 area again. But it hasn't set up yet. Remember, we've got to wait for the time frame, but the trend is down on the 30-minute. On the 15-minute, same thing. You've got a possible FUBAR Mr. Sneaky, and you've got a possible start of a downward trend on the 15-minute if they fail to come up and close and get above the gap fill, which will be about 67.50. And then on the 5-minute, you can see, you can see that we've got a start of a downward. No Mr. Sneaky tech gap. This is a double bottom, putting in a weak low here, but there is a technical gap. That'll take us up into the 66.50 to close it out if we close it through price rather than through time. So moving on to the big picture. Again, putting it into context. We're still in this upper distribution. The microcomposite VPOC is at 67. Why is it at 67? Then we had that is weird. It shifted. It shouldn't have shifted. I'm going to have to check my charts and do, oh, that's because I'm looking at the wrong one. Stupid me. This is the, there was one back, we were trading back here before too, but this is the one I was wanting to look for. This is the one that goes from October to December, and the microcomposite VPOC is 63.50. We just tested it and bounced in the last half hour, but we are in this upper distribution. We've come down and we've tested this gap zone that starts from 64 and goes down to the 58.50. It looks like we're going to open up in the lower and possibly break out of this microcomposite. So right now, if we fail to get back above the 69.70 area, then I'm expecting a move down into the 61.50 and more likely come down here into the 56 area and close out. We've got a lot of repair work to be done in this area, but the we do have strong price acceptance between 63.50 and 61.50, so they could bounce from here today and move up. I'm going to be using the 76 area as a key line in the sand. I'll show you why in a minute. It puts us inside of the value, back inside of the value area. Also puts us above the LVN that separates the double distribution from yesterday. There's a bunch of different things. So let's take a look at the overnight. Well, here, let's take a look at the flex levels first. So this is the gap zone. We've got this microcomposite VPOC at 6150, or composite VPOC at 6150. The gap zone goes all the way down to 5850. We just bounced off of 6350. We still have a naked VPOC at 63 and a quarter, a naked close at 60 and a quarter, naked close at 56, and a naked VPOC down at 54. So this whole area from 64 down to 54, this 10-point move, has a lot of targets down below it. You can see that the double distribution from yesterday, the start of that is basically around the 76. The 76 and a quarter was also the range low from from Wednesday. Excuse me. So if we get above there, then we're going to get into this upper distribution, and I'd expect for us to move up towards that 8150 scene of crime from the Fed day, and up into the distribution up here. So taking a look at the overnight we had had a pretty good price acceptance. They were holding that 68 pretty nicely, and then they broke it in the last half hour, and now they're creating a new distribution zone with an LVN right here at 67. So right now we could put in another lower low because we still have 25 minutes to go, but currently right now the overnight low is at 63.50. Going to get real crowded down here. 63.50, and our overnight high is up at 76. That's also why I'm using 76. And then our VPOC is not likely to shift at 69.50, and that's just below the VPOC that we put in just on the close. We stole the VPOC into the close. We had a VPOC shift down on the close. That's why we were expecting lower prices overnight. And that's about all the information that I need. There is this LVN here starting at 67, but I don't think it's strong enough yet because we just came down and put it in. So I'm going to be using the 65 and a quarter instead. So that's all the information that the overnight's going to give us that we need. Trade zones. Going to have the 65 and a quarter value area low and the range low from the prior day. Target above that is going to be the 67.50. And then the overnight VPOC at 69 and the naked VPOC from yesterday at 70. Our gap close is up at 73, 73 even. That's going to be a target. And then our monthly critical mass, our monthly open is down at 2052.75, and our daily ATR is running 2186. So based on that, actually that's going to come down just slightly. No, it's going to be there. Based on that, our monthly critical mass kicks in at 74.75. So our key line in the sand for me is going to be at the 76.50. Because if we get above the 76.50, then we're above critical mass, we're above the overnight high, we're above the LVN, we're above that range high from Wednesday, and we're likely to get capitulation from the sellers, and we're likely to drift up into the upper distribution and back up towards that 81 and 85, 85.75, which is the microcomposite VPOC, okay, of this microcomposite that we've been chopping around in for the last 10 days or so. So there's going to be a target there at 80. I'm going to use 85.75. and there's really not a lot of resistance. There's a little bit of resistance. I'm going to be looking at the 80, 75 to 8150 area, but above that, I think that we could go up. Our daily ATR is going to change. So off of this low 63.50 plus the 21.86 is going to take us to 85.25 and put us right below that microcomposite VPOC. All right, and then off of the overnight high, our that doesn't change. Our daily ATR target takes us down to the 54.25 area. So we've got range to get down into the 54 and travel through the gap and take out all these targets below. And a little bit of support here at the bottom of the gap zone. But really, if we can't get inside of yesterday's range and take out these upper targets and get above the 76 area, then I'm expecting a move down and a drop down through all of this area here and a chop into the month close down here. We don't get into monthly critical mass until we get down all the way down here to 30 and our weekly ATR targets down here, and that's beyond our capabilities in terms of our range unless we get a flush on the end of April, which I'm not expecting. I'm expecting my main hypothesis today is to chop on the open, probably come down, test this overnight low, take it out, a attempt of responsive buying up into the prior day, and then failure somewhere between 70 and 76, and then a move down through the low from the prior day and down to take out, and main target below is going to be that 61.50 with extended targets down at 58.50, 56, and 54. And I expect to chop around there the rest of the day. Hypothesis 2 is we fail to get into the prior day range, and we come down and we take out these targets, they chop around here, and then we slowly work our way up into the lower distribution and chop around up in here between the 76 and the 71 area. That's hypo 3, or hypo 2. Hypo 3 is chop on the open, move up, fail, come down here, chop around in here, and then fail, and then move down towards that 40-50 area and get a bit of a trend day and capitulation into the close. Remember that 40-50 is the microcomposite VPOC from this balance area that we broke out of. So we could get a flush at the end of the month. You know what they say, go away in May. Well, we could get a walk away and a flush. I think it's low probability that we'll reach the 40-50, but we have to have that as a possibility with the weakness that we've seen and the fact that we got a neutral extreme day yesterday, which wasn't really expected. So again, main hypothesis, chop on the open, move up, fail somewhere between 70 and 76, come down through and take out all these targets down here, test the bottom of the gap zone, and chop around into the month close, maybe start working our way up. Hypo 2 is a move down, failure to hold the range, come down here, take these targets out, find some responsive buyers, and then work our way up into and chop around into the 76 and 71 area. And then hypo 3 is up into the lower distribution from yesterday, failure, come down, chop around here, and then get continuation wave down into the 40-50. So I know that's, we are really quick. I'm not going to do gold today. Gold is still, well, let's just take a quick look at it, because gold did break out and continues to to make moves higher. So we were talking about this, this 58 area yesterday. I said if we got above it, we'd likely come up into the 67, 68 and attempt the breakout. Overnight, we did break out above the 75, 74 level and hit our first target up here at the 84. If we hold 70, we need to hold 76 to 74 area. If we hold that, I'm expecting a continuation up into the 93 and a test of the 1300. If we can't hold the 76, 74 area, a move back down into the 67 and a test of the 64. Anything below 64, I think you're going to get a move down into 58 and come back towards this 53.30, which is the composite VPOC. Okay, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.